Sensex Nifty off day's lows as auto stocks gain. Nifty PSU Bank falls nearly 1%. Broader markets outperform. Most sectoral indices barring FMCG, auto and media and metals are in the red. Oil and gas lows but still remains as the top loser. Tata Coffee and Tata Consumer shares surged to life highs after announcing the effective date of merger as 1st January. Kalapataru projects surges over 9% on winning international orders worth 3,244 crore rupees. Hello and welcome. This is Large Trades on NDTV Profit. I am Agam Vakil and this is where we talk about all in terms of bulk deals, block deals and volume buzzers. But before that, a quick look at how the markets are faring at this point in time. We are seeing steady, well, not gains, but a 0.25% decline for the benchmark indices. The Nifty is down, as is the case for the Sensex, by just as much. And we haven't really seen too much traction. On the whole, we're currently trending lower as far as the Bank Nifty goes, near day's lows. And on the whole, there is a little bit of profit taking as we move into the final couple of days of this calendar year. We come out on Monday in a new year. That said, as far as the markets are concerned, well, currently quiet, I would say, to say the least. Let's talk about a handful of big movers as far as the mid-cap space is concerned. And I do want to talk about something like an EB Capital, which is up as much as 2.5% as we speak. But one of the biggest movers in the mid-cap 100 is Vodafone Idea, which has surged ahead, currently trading near day's highs, up 17.5% at the moment as we speak. So a substantial amount of gains coming in. We're going to have to wait and watch as to what the updates are with respect to Vodafone Idea. Besides that, we have gains in Crompton Greaves as well. That's up and about, and that's up around 5.1% as well. We have a little bit of resurgence in IRFC, that's Indian Railway Finance Corp. That's where we have seen a little bit of a reversal of sorts after consolidation through the course of the last few days. And Ashok Leyland, of course, is buzzing on volumes. We're going to talk about Ashok Leyland as well in the show today. And, of course, on the losing end, we have weakness in Tata Communications and Oil India. Both these companies are down by around 2.5%, and Persistent Systems is also under a tad bit of pressure. Persistent is also trading down by around 2.3%. So we'll continue to keep an eye on some of these movers in today's day of trade as we move into the final hour. And with that, we'll move on to all that we have on the show. We are going to talk about Kalapataru projects, Seamec, Go Fashion, Tata Motors, and Ashok Leyland. And we start off with Kalapataru Projects, which is another company in focus today, as its one order is worth over 3,200 crore rupees. The shares of the company have also hit an intraday high, and we have Anushi Vakharia who's joining us to give us more details on this. Anushi, good afternoon.
Afternoon, Agam. So the company had hit an intraday high of about 10% now, with some significant volumes of about 21 times its 30-day average. Now, what drove the stock performance, as you mentioned, was the strong order wins of about 3,200 crores, which included in three segments. So that is the building and factory business, the design and construction, and in the underground metro project, and the transmission and distribution business. So with this, now the company's year-to-date order inflows stand at about 17,685 crore compared to about 12,178 crore it had reported in the quarter ending of September. So other than that, the company had also won an order of about 2,200 crore in the starting of the December month. Now, the stock performance so far has been, this year to date, has been up about 37%. But if you look at the analyst recommendation, they still see about a 7% more upside, with about 14 buy calls, 2 hold calls, and about 0 sell calls. So that's all on Kalapataru for today.
Right. Anushi, thank you so much for getting us those updates. To remember that Kalapataru has been struggling to move above the mark of 700 rupees per share before today. In fact, there were many attempts made over the course of the last few months, couple of months at least, and where it would test 700 and then come back. But today on volumes decisively, trading well over the mark of 700 rupees per share. And of course, that's on the back of the big order win coming through. So let's keep an eye on that one. But we have another stock which is also in focus, and that's Seamec. Seamec shares are also going up at the rate of knots in today's day of trade on the back of large trades. Over 12 lakh shares have changed hands via multiple trades. To tell us more, we have Mihika joining in. Mihika, what's up at the dock for Seamec?
Yeah, so the stock is up to an intraday high of almost 14%. And in terms of, the 1 month period, it's up 15%. And in the past year, it's up 18%. Now, volumes were more than 4 times the 30-day average. And the highest volumes were at a price of 960. And the total volumes for the day stood at more than 19.31 lakh shares. Now, the stock is up on multiple large trades. 12.58 lakh shares changed hands early in trade. And the total size of the trades altogether stands at 34.4 crores. Now, 10 lakh shares was, exchanged at 960.9 rupees, while 1.02 and 1.55 lakh shares were changed hands at 960.45 and 962.6 rupees apiece.
Right. And Mihika, what about its performance as well as how it compares with the rest of its peers?
Yeah. Just like around 2 to 3 days ago, the company signed an MOU with HAL Offshore for a charter hire of an offshore support vessel called Seapel. And this charter hire will be for 3 years, and it's at a price of $9.6 million. And now this is the third straight consecutive session that the stock is up post signing the MOU. When you look at Seamec versus its peers, the Red Sea crisis, it did, see some kind of, declines in shipping stocks. But however, the entire pack is up on a 1 month basis. But Seamec is the lowest performing at 14%, while Acer is up 93% this past month. But when you look at, the price to earnings ratio, Seamec is the most expensive. It's at double digits at an 81.02 price to earnings, while its peers are in single digits ranging from 0.4 to 8 price to earnings ratio.
All right. Well, we'll continue to keep an eye on that one. Mihika, thank you so much for getting us that update on Seamec. Of course, it seems pretty expensive, at least when it comes to price to earnings ratio. The question is that if we are going to see increased profitability going over through the course of the next few years, perhaps then it might perhaps justify the price to earnings ratio of around 81 times. But on that note, we slip into a short break. But on the other side, there's lots more. Stay tuned to NDTV Profit. Well, on to the other stock in today's day of trade where we have Go Fashion. Now, that one has in fact touched an intraday low of 7%. And while we have seen growth in the first half, there just may be some concerns coming through with respect to its business. The question really is, who are the participants in today's last trade? That's something that we will know eventually down the line, perhaps towards the end of the day. But let me get in my colleague Mahima to give us more of an update on the trade today. Mahima.
Right, Agam. So as you rightly mentioned, we don't know who the buyers and sellers are at present, but we'll probably come to know by the end of the day today. If we talk about the stock performance, as you rightly mentioned, has hit an intraday low of 7% today. And overall, also if we see in the 6 months, the stock has gained hardly 8.5%, and the YTD growth of stock has been hardly 5.6%. So the stock performance overall for the past 1 year has been muted. If we talk about the H1 financial highlights, the revenue has grown by 15%. EBITDA has also grown by 18%. However, if we see the peer comparison, its peers, if we see, are Page Industries and Trent, where the valuations for Go Fashion stands at 80.9 and Page Industries stands at 75.2. Trent's valuation stands at 243.4, which is very high as compared to the other two peers. And if we talk about analyst recommendations, though the stock has not performed well, the analysts are bullish on the stock still. Out of 8 analysts, all 8 are saying that one should buy the stock. And we also had 2 brokerages talking about this particular stock, and Anand Rathi has rated it buy with a target price of 1607. And we also had IIFL on Go Fashion, which has maintained an ad rating with a target price of 1300. And it is also given its estimated CAGR for sales and EBITDA at 20 and 22% respectively over FY 23 to 26. So this is all about the stock performance for today. Let us find, like by the end of the day, we'll be finding out who the buyers and sellers are for such high volumes.
Right. So the question really is that who are the sellers at this point in time, because the volumes today are the highest in well over a month. And while we do have brokerages which are positive as far as Go Fashion is concerned, the question really is that has something changed fundamentally for the company? These are some of the questions which will be answered over the course of the next few days and weeks. But on that note, Mahima, I'm going to take a moment to thank you for giving us those updates. And from there on, we move on to the auto sector. First up, Tata Motors, which is in focus after a robust rally in today's day of trade. What's behind this rally? Let's get in my colleague Himansh to give us more information. Himansh, over to you.
Thanks, Agam. Tata Motors has seen quite the upsurge today, surging 6.5% intraday today, and also not only just touching its life high, but also being the sole counter on the Nifty 50 to double over the past year. Well, this comes in the back of the recent news flow that EV makers are seeing a surge on India's switch plans to 8 lakh diesel buses, to basically electrifying 8 lakh diesel buses in the coming years. The plan comprises 200,000 or 2 lakh electric buses for state transport units, 5.5 lakh for private operators that are going to be shifting from diesel to EV. 50,000 electric buses are going to be replaced for schools as well as employee transport vehicles. The debt profile, well, from a fundamental perspective as well, Tata Motors has seen quite an improvement in its debt profile and its debt reduction plans. Moody's as well as S&P have recently upgraded the outlook on the counter to positive. In terms of the margin profile as well, brokerages have been commenting that they are bullish, and these reduction plans are going to lead to margin expansion in the near and mid-term as well. In terms of analyst recommendations, you're seeing a 28 buy, 3 hold and 4 sell, but it does imply a 5.7% downside when you're looking at the consensus analyst estimates.
Right, and of course a lot of analysts are also banking on the big change and the big transformation towards EV when it comes to the Jaguar Land Rover stable, and that's something which will play out in favor of Tata Motors, of course. But Himansh, stay with us. Let's talk about Ashok Leyland as well. What can you tell us here?
Right. So Ashok Leyland as well, the stock has been up nearly 4.4% intraday, and it also hit its life high of rupees 183. And this comes after volumes surged nearly 4 times their 30-day averages. And the stock is up besides the recent report on EV shift, you also have the stock up on a recent interview with Mr. Sanjeev Kumar, the president of the medium and heavy commercial vehicle segment for the company. And Sanjeev Kumar has said that government may include trucks in the FAME 3 subsidy, and Ashok Leyland is one of the biggest truck makers in the country. The scrappage policy, road development policies as well are expected to boost sales for this segment. He also sees MHCV segment, industry sales at uptick of 9 to 10% in FY25, but he expects a slowdown coming in FY26. They aim to grow the share in the bus market by 100 bips, and after buses, he touts trucks to be the next big thing in terms of the electrification movement.
Right, fair enough. Hemansh, that's as far as Ashok Leyland's concerned, and some developments coming there. In fact, both Tata Motors and Ashok Leyland will once again be in focus on account of course, commercial vehicles. Hemansh, thanks for joining us and getting us those updates on those two big auto majors. And on to another stock which is in focus, and that's Man Industries. We spoke to the management of the company on the successful testing of hydrogen transport pipes. Listen in.
To make the compatible ourselves in the market conditions, last 1 year, we did a lot of energy, money, and time to research to how to make the compatibility this thing. So we did last 1 year, a lot of tests, research, everything. So we successfully completed our this thing. End of the year, this is a good news. The one of the European research center has given approval to us, and this approval will help and to acquire and get the new businesses, as well as one of the European company also approved our product for hydrogen transport. So we are the first company to get one of the European company, you can say like Germany, they approved our products. So research and development is one stage, and to get the business in future. So in coming years, there will be large scale hydrogen utilization, and we have to make to ourselves. This was the process, we completed it.
And then on to the telecommunications sector. With 2023 coming to an end, so did the hopes for a tariff hike from some telecom companies. But who will be the first one to raise tariffs in 2024, and will it begin before the election season is over? My colleague Smriti Chaudhary is here to answer all these questions. Smriti, good afternoon.
Good afternoon, Agam. You rightly mentioned we're closing 2023 without any tariff hikes, but companies remain hopeful. And out of the three players the three major players within the sector, Reliance Jio has come out and said that they do not plan to raise tariffs and they want to focus on customer acquisition. So that player is out. So the other two players, that's Vodafone Idea and Airtel. Now, Airtel has been propelling for a tariff hike time and again, and it says that it will even move unilaterally if the industry doesn't agree, but it probably won't happen that way, because if one player raises tariff and the others don't, then that player becomes incompetitive in the industry. And in the words of an analyst, telecom services is a vanilla service. That means there is no brand value to the service. So the moment a subscriber gets lower tariffs, they move there. Now, coming on to what kind of tariff hikes are we expecting? So according to an analyst that that NDTV Profit spoke to, they're expecting 15 to 20% hike in tariffs in 2024. However, another analyst said that the quantum of hikes will be smaller and there'll be multiple hikes over the year. Now about the timing of these hikes, some analysts believe that this will come post-election season. However, one of the analysts says that it can even start before that election season is over. Now, if we look at the ARPU trend of the players in the industry, Airtel's ARPU stands at 203. Now, mind you, this is a wireless ARPU of the company as compared to Jio's, which stands at around 187. Jio's ARPU is a cumulative ARPU for all its services. So considering that, the two numbers are not exactly comparable, because Jio's wireless ARPU will probably be lower. Now, this is the exact reason which the reason why Jio might also need a tariff hike. The second reason that ARPU may increase is the moderation of capex by Airtel and by Jio. They've been spending so much on 5G, and that may also lead to a higher ARPU in the next year, that is 2024. And considering all of that, we are already at a stage where India's ARPU is relatively lower than its global peers. Now, JM Financial expects a near-term delay in tariff hikes is likely to benefit Jio and Airtel, their pricing power and market share, as it could expedite to a duopoly. So that's a very interesting take by GM Financial. So that's where we currently stand, and 2024 we do expect some hike in tariffs.
Absolutely, Smriti. Thank you so much for getting us those insights into what's really happening with respect to pricing and tariffs in the telecommunications space. At least as far as the duopoly angle is concerned, the jury is out, and a lot of players, along with the authorities as well, do believe that it will be beneficial for India to have 3 players and not just 2. But it's a question that remains to be answered, whether or not and how things do eventually pan out down the line. But we shift focus then to Kalapataru projects, which has also surged over 8% on winning international orders worth 3,240 odd crores. We spoke to Amit Upalenchwar, who is a director at the company, on the order book execution and industry trends. Let's listen.
Our order book currently, the way the split stands, is roughly 60% is coming from domestic markets and 40% is coming from international markets. Increasingly, we want to take our other verticals and segments overseas, as I mentioned to you a little while ago, and hopefully we should balance this to 50-50 in the next 12 to 24 months, and that's what our endeavor is.
And that is all that we have for this edition of Large Trades. Don't go anywhere. On the other side, India Market Close comes up next.
Right, thanks for tuning in to India Market Close. Apologies, we're starting a couple of minutes late, but it is not a bad day for the markets per se. Yes, we are not trading in the green and we are about 1/3% in the red, but it's not breaking down. It's still holding to 21,700. And for the end of the year, just to take a pause and a breather is probably not a bad thing. See this, the low is somewhere here. Yes, we are close to the lows currently, but not certainly at the lowest level for the day today, so which is actually a good sign. The bank Nifty should come up on your screen next. And there is a bit of pressure, 0.7%, 340 points, and we are trading close to the day's low. So the banks are putting some pressure on the large cap end, but there are other sectors which are coming to the fore. Now, before I get to that, just quickly bring up the heat map, or bring up maybe the mid cap and the small cap indices. Either of the two is fine, and just show you what's happening across. So the Nifty mid cap index about 0.5%.